what we're going to try to do is that we're going to have a back-to-back discussion, questions, to try to share with you the views of an investor which is not a VC fund. And hopefully it will be as interactive as the previous roundtable, and you'll also learn a couple of stuff. So before we get into this discussion, Juan, can you please introduce yourself and a little bit of your background?
Yeah, absolutely. So thank you very much for having me here. So I hope I can add some value and give a different perspective. So my name is Juan David. So I am the founder of Keyrock. Keyrock is a market making firm. I would say 6 years ago when we started the company, the term market maker was not very well known, and not a lot of people knew what it was all about. I think that has been changing, and maybe more people do know a little bit what is it about. But of course, happy to also introduce and give a little bit of context in that. So I started Keyrock around 6 years ago, building algorithms for trading. And at some point, we realized that we could use those algorithms to tackle the problem of adoption of a tokenized economy. So basically, as we saw all of these digital assets trying to create their own small ecosystems, we understood that for those ecosystems to flourish, they had to have enough liquidity, correct? And that's kind of like where we started to work on the concept. And that's the sole purpose of the company, which is how do you build trading systems that enable liquidity for assets to get adoption. And that's what we do, and that's what I've been doing the last 6 years.
All right, and before that, what's your background?
So I was actually born in South America initially. So I grew up in Colombia first. Nice. I moved to Europe a bit more than 11 years ago. First to Denmark, then Germany, and then Belgium around 9 years ago. And I worked in the fintech industry, built a couple of companies in tech startups. Did the whole raising capital, building a couple of companies. Some did well, some didn't. But overall, it took me to a point where I realized I wanted to work in the digital asset industry. I very early on, my background was in central banking, so I was very much engaged into everything that was related to monetary policy and I would say welfare economics for a country. So when I discovered Bitcoin, I was personally very connected to it from very early on, just because I was lucky enough that as I understood central banking very well, I understood what it meant very early. And that drove me to get into it and start with Bitcoin. And then from there, of course, jump into all the rest of the digital assets. And that's the story.
Super interesting. So an economic background, basically.
Yeah.
So, and an entrepreneur, not a trader, because I thought you were
exactly.
a trader originally.
No, indeed. So I actually I was more of a techie, and then I got into trading because of the need to exchange these assets, which I thought they made a lot of sense.
Yeah, well, I think it made a lot of sense. And and so now, you're the co-founder and chairman of Keyrock.
Yeah.
So initially, I didn't know what was a market maker. You were right, because I think it's an activity that is more meant to publicly listed companies originally. Or if you launch the token in the crypto space, you have to engage with a market maker. Can you give us some KPIs to introduce Keyrock, except that you're here for the past 6 years?
Absolutely. So look, just to give you an idea, so Keyrock is a 150 people company. We do market making and have very many different lines of business. Our core business is to do market making, where we manage the treasury of projects that have gone to market and have their token being traded across a wide variety of exchanges, decentralized exchanges, and so on. We work with a lot of the top projects in the industry, starting from companies like Ripple, where we manage the treasury for market making, but all the way down to very small startups that are just in the beginning of going to market, building the token economics of their startup, and then looking for their first listing. So we do the whole spectrum, and so we support a lot of different companies in that regard. Okay. We also do options trading. So we have a unit that does options and what's called an OTC desk.
And do you work as your own trading desk?
Yeah, exactly. So we basically develop our own algorithms and then have our own trading desk that manage all of the liquidity systems that we operate for others. Okay. But we also operate for ourselves, of course. And this trading team typically would be trading in the range of a couple of billions of dollars a week on any particular week. In the bull market, it used to be more. Sometimes it could reach the billion daily. Has changed a bit, but what you could imagine is that the systems are typically at any given point in time buying and selling something every second.
Okay, so just to rephrase what you were saying to make sure people understand. So basically, let's say I'm doing a Web3 project, launching a token. I'm going to list this token, and in order to provide liquidity, I come to you and contract with you and give you some of my tokens so that you can buy and sell on the specific exchange I listed, so that there is liquidity for external players.
That's plus or minus how it works.
Okay, and the second part is, let's say I just fundraise a big private sale of my token. I have quite an interesting treasury in crypto. I can come to you and tell you, hey, my crypto is slipping. Can you manage my treasury?
That part is a little bit more complicated, correct?
Okay.
Because then we would be an investment firm.
Okay.
And at that point, that's where really like we draw a line, correct? Like
Okay.
we trade to support the adoption of a system, and not for the sole purpose of helping a company to yield their capital. Yeah.
Okay.
Some of the activities that we do result in a better structure for the treasury of a company, but it's a side activity compared to the primary objective. If a company comes to us and say, "Hey, look, I have $100 million. Can you just make a return of 10% a year for me to pay salaries?" That's something that we would typically try to avoid, okay, and maybe just pass on to a real, let's say, investment firm that will focus on that. But what we do that is very interesting and connects to the part of how do you support that ecosystem is that a lot of the protocols and a lot of the systems developing in this industry are building tools that are for traders, are building protocols that enable decentralized finance, are building decentralized exchanges, money markets, platforms. But even if you go all the way to gaming, a lot of the Web3 gaming is very much an economy that has incentive mechanisms and it has trading, that has a marketplace, that has NFTs. All of these systems are systems where you can become a power user of these systems. And this is what we do. So we go to all of these ecosystems and we understand, okay, what are you building and how could we, as an algorithmic trader, be a power participant of your ecosystem? And with that mindset of what you're building makes a lot of economical sense for a very large trading entity, we make our investment decisions where we say, if we would use this when you become a $1 billion company, maybe we should invest in you today and then help you to become that by us interacting in your platform and taking a position and helping you on that growth path.
Interesting. So that's part of your investment thesis that you're describing right now.
Yeah, exactly. I mean, so it's kind of like the idea. You'll be like, when you build a lot of companies yourself. So you probably are looking at, okay, there are these startups and you're researching what makes sense in DeFi, correct? And I think that's where our companies have a lot in common, because when you are trying to understand what makes sense in DeFi, maybe you realize something like, GMX, which is working really well at the moment, makes a lot of sense. Now the question is, when you analyze GMX from a pure investment perspective, you look at it and say, okay, this is a very interesting product, correct? We look at it as a very interesting product, but we also deploy a lot of capital into it ourselves and use it on a daily basis and then try to optimize it. And then from that insight, we understand, okay, what else can it be done that can make this better? And then when a small startup comes and say, hey, look, I'm developing this new thing, which is an improved version of this, then we go like, that's interesting. So we could invest in it, and on top of that, help them to get started in their journey.
Super interesting. So both an investor and a stakeholder and a partner. So that's the way you invest.
That's kind of like the whole concept of the way that we would invest typically.
That's pretty much the same with us. But before we get into deeper of the investment thesis, in traditional finance, market makers are a regulated entity, no?
It depends actually of the activity. So if you do market making as a proprietary trading activity, it's considered a strategy. Okay. And it depends on the legislation. It would or not be regulated, correct? Like what makes an activity to be regulated is not per se the activity itself, but for example, the way that you take external capital. If you're taking investors in and you're going to manage their capital with a market making strategy, then you're providing a asset management service, and then you might need to be regulated. It also depends on the asset that you're trading, because when you talk about traditional finance, it also has a lot of different categories, because we have equities, we have forex, we have commodities, and commodities and forex are actually regulated in a more light way, similar to digital assets, or where digital assets are going. While for equities in Nasdaq, you do need a license to market make as well. It's a much lighter license than a banking license, but still you do need one. We've been actually, and we are currently in the process of having a license for equities as well in the UK, in Switzerland, and in Belgium. We're actually applying for the three of them.
Okay, super interesting. So let's get back to the investment thesis, the way you invest.
Yeah.
One of the questions of the previous panel was, does your strategy change depending on the economic outlook of the space? I guess I would say quite no, because you invest in a project that you think can be used for yourself.
I mean, it might just adapt, correct? But indeed, we would take a lot more strategic investments and not purely looking at, okay, what is the deal structure and what is valuation, and does the valuation make sense? Of course, we want to invest in things that do make sense, and we are careful to not overpay. I think the current market is actually very positive for that, because you're going to get better valuations. But the reality of it is that even in this market, the deals that we've wanted to invest in were all oversubscribed. So in our point of view, it has not changed much. They were all oversubscribed to the point that to take us, they had to not take somebody else. And from our point of view, the fact that we come in as a strategic investor that is also going to be a participant in the platform, put capital or TVL, into the protocol, is an added value for them. So they would pick us over somebody else. But the majority of those rounds were oversubscribed still today. So I have not been able to see a major difference, except that the multiple of valuations have gone down because the lead investors are actually pushing them down, which great for me, correct? But we typically a follower and a participant.
Super interesting. I had another question in mind. It's more related to the kind of the use cases you're more interested in. As a financial company, do you have 80% of your investment that are DeFi related, or how do you describe the spectrum of investment?
So we have two spectrums that are very interesting. So the first one is on the one thesis, which is related to any type of technology, service, product that enables a new asset class to be tokenized, correct? So what we assume is that more asset classes will be tokenized in the future, and so everything that does that will make sense. So for example, we've invested in companies doing tokenization of unretired carbon bonds, correct? Which is kind of very far away from our understanding of DeFi, but we still think that makes a lot of sense. Or companies I don't know if you heard of Credix, for example.
No.
So these guys, super interesting. They basically managed to tokenize a process to help farmers in Brazil to do basically to raise capital for them to fund their operations by doing factoring, correct? I don't know if you are familiar with the concept of factoring, but you have an invoice. Yeah. You're going to be paid in 60 days, correct? And you bring that invoice back. And they tokenize this process and automate the hedging process to hedge the country risk of, let's say, the real versus euro. And then they come here, and then you can buy this token that pays you a yield of 10% for you to do that activity and support a farmer in Brazil. So that for us is bringing on chain a new asset class. So that's the first thing that we do, and we invest in companies that are doing that. And there we cannot be a participant immediately, but we do assume that we will be a participant once their products come out to market, because then we can be a market maker of retired carbon bonds, or we can be a market maker of bonds.
Pieces or
exactly,
whatever.
correct. Forest. We also did a tokenization of forest, for example.
Super interesting. Go ahead.
And then the second one, which is more just kind of the DeFi thing, which is every technology, product, or service that simplifies the value chain of liquidity. Because our underlying belief in the whole company when we started and still today is that the main value proposition of digital assets is liquidity. Why do we tokenize things? If you tokenize something and that something you tokenize is not liquid, why do you even bother? So if the main value proposition of the whole thing is the liquidity that can be acquired, everything that makes that easier will make sense.
So everything that improves the infrastructure
of making liquidity easier to access and manage, correct? So for the most clear example of that is an AMM, correct? The impact that the creation of AMMs and systems like Uniswap had in terms of the adoption of these token economies, it was huge, correct? So, and we're still exploring a lot of different types of AMM technologies and invest in them actively.
When you deploy your market-making strategies, you deploy them on both centralized exchange and decentralized exchange. First, what's the ratio between both, and how do you hedge your risk deploying this capital? Because we've seen protocol being hacked, we've seen exchanges having liquidity issues.
Yeah. So unfortunately, still majority of the capital is trading on centralized exchanges. Okay. I think that the transition has to be slow. So at the moment, we are very active on DeFi, but 100% with our own capital. We don't have any customers' capital yet interacting on DeFi. And that's really where we draw the line, where we are not yet at the stage where, like you said, we're comfortable with the smart contract risk and with all of the risks that are associated to it to start scaling it on customers' money. We are still in a stage where we say, okay, we're happy to put our own capital, and if we lose it, nothing happens. If there is a small hack, nothing happens, but we are learning and just trying to implement that. Now, it is enough that has taken us to the point where we have probably tested majority of the major protocols in the industry and have automated systems in all of those protocols running on a 24/7 basis.
Thank you.
But only with our capital. I mean, you're also testing these protocols, correct? You have a DeFi lab. I would assume that you do it with your money at this stage.
Of course. Yeah.
Because doing it with other money would be a little bit of, I would say, experimental. Yeah. So I mean, what are the algorithms that you're developing or the systems that you're developing, mainly focusing on?
So what about a year ago we started this DeFi experimentation, and when we explored the space, we've seen that there is actually very low innovation on the modeling approach behind the protocols. Since everything is open source, people just fork, twist a couple of variables, and they say, oh, hey, look, we've just changed this variable. So what we're trying to do is really improve the models and the mechanic behind it. That's the first thing we do. And also the team is coming a lot from traditional finance, and they bring some of the traditional finance, methodology. So we try to be very risk management oriented. So we've developed token rating methodologies, just like Moody's, to try to understand the financial risk associated to the different yields that are presented on the market. Because you go on all the DeFi protocol, you just see degenerate yields. And there's no indicator on the risk associated to this yield. And everything is quite complex, and to deconstruct and understand what are the risks is a work in itself.
Yeah, no,
so we're trying to build frameworks to understand, to deconstruct those, so that we can qualify and quantify the financial risks that are associated to those yields.
Absolutely. I mean, the yields that are presented in the industry, I mean, like it's a scandal. The way that all these companies market their yields is they're all marketed in a way where you get a representation of the value that you can earn, not accounting for any potential risk associated to it.
And very rarely a P&L in USD equivalent to understand the net APY.
Yeah. I mean, honestly, I mean, if the industry will be regulated, that will be jail time for doing that.
Exactly.
If we think about the way that Uniswap advertises their yield is ridiculous.
Yeah.
Like they basically say you make 20% APY without counting the impermanent loss. But the impermanent loss has like a massive tail where if the asset moves more than 20%, you lose 60%. I don't know. Like it is completely crazy, the fact that they managed to advertise a potential earning that does not account for the potential loss.
Yeah.
And that people just put money into this without really thinking about it. I don't know anybody that made money with liquidity pools in Uniswap V2 in 2022. Everybody lost money.
Yeah, that's why I precised you want to know the net APY to understand really how much money you're going to make in a dollar equivalent.
Yeah.
And so what we're trying to do is simply to build the tools for people to understand better. I also think that there is a huge requirement for more pedagogy and education and financial education. So we're trying to work also towards that. Do you have any investments that are in edtech that tries to use the blockchain technology or try to push the understanding of
In
Web3?
edtech, no, not really, honestly.
No, you
I'll
don't?
be honest. Like, so we're very niche in what we invest in,
Yeah.
correct? Like, and I think if something is outside of that, it will be very hard for us to take a position, just because we don't think we can add as much value, correct? And there are a lot of VCs, there are a lot of people that are adding value and that have real capital, and we're not a VC in reality. We're not trying to compete to be a VC. We're trying to be a good partner, and typically we partner with VCs. We actually ourselves even become LPs on VCs because they know better than us in taking those decisions, those strategic positions as a lead in rounds. And I mean, a company doing education would be too far for me to do. Maybe if they are educating about market making, but I have not seen that one.
That's very good. You introduced that you're an LP in several VC funds. So you kind of invest in VC funds. So what are you looking for in VC funds to invest in them?
I mean, honestly, like we're looking at that their investment thesis makes plus or minus connected to what we're looking for as well, so that we can collaborate. I mean, like the reality of it is that when it comes down to who we are, again, we are a 150 people company. Our monthly salary expense is very high. Let's put it that way. So making an investment, almost any investment that we make, is non-material to the actual long-term value of the company. Okay. Because we're not a VC structure is the opposite. It's a small group of people. They maintain costs pretty small, so they can manage investments at scale. And then if the investments work, they make a lot of money. But in our case, investments are strategic. Like what we want from investments is if people are investing in things that we also believe that we can add value to, and that they can introduce us to the right entrepreneurs, so that we can then build and interact with their protocols. One of the things that we do is that we act in a lot of these DeFi protocols, but by rule we only do it if we actually have a direct relationship with the founders, because again there is no KYC, the smart contracts could be hacked, and that's one of the only ways that we've seen that we can manage risk. At least establish that relationship through our partners that invest in these companies as well, so we can do that. Yeah. So if we invest in a venture fund, and that VC does, let's say, a 20x or 50x in 5 years, that is still immaterial to the company just because of the size of the company. Okay. And so the thinking has to be just very strategic. Like we just invest if we think they're doing something that makes sense. So we wouldn't invest in a very late stage VC. That wouldn't make a lot of sense for us. So majority of the things that on the companies that we look at are investing in more earlier stage, DeFi focus with a similar thesis. So that's more what we would be looking at, yeah.
Thanks. One last question. The last question from the previous roundtable was: is there a deal that you missed and you wanted so badly to be in it?
So many. I have actually the opposite. So my story is, and this is a little bit sad. So when I was starting, when we were like, the company was a little bit earlier, and we went through the first cycle of the bear market. I think at the time, that bear market was very different than this bear market, let's say. At that time, people actually lost hope and they stopped building. Now, nobody has to stop building. People are still building amazing things. Back then, people really stopped building, yeah? And at that time, even I got to a point where I didn't believe in anything except Bitcoin and Ethereum. I was like, everything else does not make any sense, bunch of crap. And I got a lot of startups that were coming to us and asking us to help them with market making and to start building products. And back then, I do remember very clearly this situation where I have this conversation with a lot of entrepreneurs, as a matter of fact, but especially with everything that was related to lending and money market systems. So at the time it was Curve. I have this conversation with the founder of Curve, and he shows me the platform. And I basically told him, man, this looks like shit. Like, there is no way we're gonna engage into this, And then, of course, a couple of years later, it's like, oh my God, that was so dumb. So it does happen. So, but I didn't have that mental clarity at the time. So I basically said no just because it looked ugly, which it was a completely stupid reason why to say no.
Yeah. It still looks ugly. Actually, I have a new question that came into my mind, so that was not the last question, but I forgot about it. I wanted to ask you. Yeah, what's your vision of Web3? What do you think are the most pertinent use cases? And
Yeah.
I'm talking to the entrepreneur, not to the
Yeah.
to the founder of the market maker.
Yeah, definitely. So, I mean, when I personally look at Web3, I myself also invest personally on things, and I'm very excited about a couple of interesting use cases. So one of them is the idea that decentralized finance can not only basically be used to do the same that we do in centralized finance, but that it can be more capital efficient. And it sounds like a very basic concept, but basically, if you look at decentralized finance and blockchain in general, I think that we have not yet figured out how to use composability to the power that it should have. And what I think is that all the Web3 ecosystem, once it figures out how to use composability to make things extremely capital efficient, is going to unlock a tremendous amount of value and is going to abstract that value from basically centralized finance. So that's one thing that I have very clear that can be done. To do that, we need like a lot of better cross-margin systems, cross-chain communication protocols, non-deterministic blockchain systems like CK technology to be able to actually have that cross-chain compatibility working efficiently. So everything that goes on that, I like very much, and I think is going to work very well. Is one of the biggest bets that I personally believe in, and makes sense for me. Everything that is gaming, like, is something that, like, it's hard because I think majority of games are not going to make it. Like, even in Web2, they have a very, very tough time. But the reality of it is that when I look at the amount of development that is going into making games being Web3 enabled, I'm 100% convinced that at some point there's going to be a blockbuster game, and it's going to be like multi-billion-dollar market where it's basically a digital economy where you can have your account, interact, and do everything there. You can make money just by playing the game, or live in a digital world. Not so much into the, like, metaverse idea, really just the economy of the game. It could even be just a Web2 like visualization game, but just with a really good token economics. Majority of gaming companies that started in crypto first, they were just opportunistic. But the new approach to gaming has been very, very interesting, where a lot of these companies are seeing themselves as gaming studios and not as blockchain companies. And now that they changed their mind and they realize that they are actually gaming studios that know blockchain and not the other way around, they're starting to come up. And I think next year they're going to come up with amazing stuff in the gaming space. So those two things I like a lot, and I'm a gamer as well, so I like that.
Super. Thank you, Juan David. We have a lot of entrepreneurs here. Is there any advice you wanna tell them?
Advice? No, I don't give advice, but I like to help. If anybody wants to talk with me, I'm happy to help.
Thank you.
Yeah. Cheers.